Matt Walsh and Nick Carter are partners at Castle Island Ventures. All views expressed by them or the guests on this podcast are solely their opinions and do not reflect the opinions of Castle Island Ventures. Guests and hosts may maintain positions in the assets discussed in this podcast. You should not treat any opinion expressed by anyone on this podcast as a specific inducement to make a particular investment or follow a particular strategy, but only as an expression of their personal opinion. This podcast is for informational purposes only.
Brought down by bad mortgage investments, Lehman, which has 25,000 employees, will be liquidated.
The federal government loans American International Group, AIG, $85 billion.
This is a different kind of market, and the Fed is asleep.
The federal government is stepping in to stabilize Fannie Mae and Freddie Mac, the two mortgage giants that have been threatened by the housing crisis.
The Bank of England has pumped £75 billion more into Britain's ailing economy with a new round of quantitative easing.
You print a couple $1 trillion, and all of a sudden, people start to worry. So out of this worry, we have something called the Bitcoin.
Welcome to On the Brink. I'm Matt Walsh.
And I'm Nick Carter.
Are you following this Hantavirus?
Yeah, how can you not? At this point, you can't afford to write off any new virus, just from a financial markets perspective, let alone dying.
What's your model for this? Is it like if Balaji starts tweeting about it, we start to get really worried?
Yeah, and we're really excited also because, we know how to trade these things now.
Yeah, you just go long everything, right?
Yeah, I mean, at the right time. So, yeah, on the one hand, you might die from a fatal disease. But on the other hand, you might get another generational buying opportunity. So,
yeah, be careful down at Consensus. I mean, you're kind of in a prime zone to pick up some sort of an illness.
Yeah, I was thinking about that, actually. I've shaken too many hands this week. It's kind of hard to tell if someone is coming from Argentina just by looking at them. It could be anyone.
Yeah.
There probably are Argentine attendees at Consensus this very moment.
Someone told me this morning that Gene Hackman died of Hantavirus. I guess it's a common thing.
Really?
Yeah.
So the deal is you get this from somehow coming into contact with like rat droppings. Is that
it? Aerosol the rat droppings or something.
Yeah, I mean, I don't even know how they could become aerosolized, but so these guys that got it were on a bird watching trip in Argentina.
On a landfill. Yeah.
On a landfill. Great bird watching to be had. And then they get on a boat, and then they take what it looks to me like the world's most hellish cruise ever. It doesn't look fun at all, even without dying of the disease.
Right.
They stop at Tristan da Cunha, St. Helena, and Ascension, which are lovely places, by the way. And then they just start dying.
It's not great. That's like the boat trip from hell.
Yeah. I mean, it's choppy waters down there. And then the problem is the incubation period's long, right? It's a matter of weeks. And the mortality rate of this thing is like 40%.
It's crazy.
So this is a very combustible combination, potentially.
Yeah, I just hope that it's not as easily transmissible as COVID.
No, and I guess the surprising thing is that hantavirus, because apparently hantavirus is normally animal to human, and so it's rare to see human-to-human transmission, but that's clearly happening, right?
Right.
Where do we stand on the lab leak versus zoonotic hypothesis here? Is there a lab in Argentina called the Buenos Aires Institute of Hantavirus?
Oh, man. I hope not. I can't deal with another scandal. And then people are just going to get kicked off of social media platforms for saying it was a lab leak. We're going to do this all over again.
Yeah, I mean, I feel like we've buried this in history, but this is a real thing that happened. The lab leak hypothesis, now fact, was a conspiracy theory. And you would get banned from Twitter for saying it was a lab leak.
What a time warp. Remember when that started and we were like, all right, we'll be back in like 2 weeks in person.
Yeah, I do remember. And we were running around the Bitcoin Expo at MIT in March 2020.
Yeah, that was the last thing I went to in person. I sat in the very far back and there were not a lot of people there.
No, it wasn't well attended. And then as it turns out, Boston was like one of the epicenters.
Yeah, Biogen conference. Yeah. So we'll keep our fingers crossed on that. We had a busy deal week, a couple of really big ones. First one up is Reap. This is a stablecoin infrastructure company. They're acquired by Kraken for $600 million. Kraken is just going on an acquisition spree right now.
Yeah, monster deal here. One of the biggest stablecoin acquisitions ever. Really interesting deal. Reap. They did all kinds of things. They're like corporate treasury management, B2B payments, payroll, all kinds of stuff based on stablecoins, mostly focusing on the APAC market. It's a really interesting acquisition from Kraken. Next up, we have Fun. That's a crypto payments company. There is $72 million from Multicoin, SignalFire, and others. Fun.
That's a good name. Then we have DFlow, which is a Solana trading platform. They were acquired for $100 million by MoonPay, which is another company that's going on just a tremendous acquisition spree. So seeing these later stage private companies really just bolt on revenue here, I think it's going to make the public story for both of those companies quite compelling.
We did say recently that it was going to be the golden age of crypto and especially stablecoin M&A.
Yeah, I think we're seeing
seems to be
right?
happening.
Yeah.
Yeah, next up we have OpenTrade. That is a DeFi yield platform. There is $17 million from Mercury Fund, Notion Capital, and A16Z Crypto.
Then it's Henri, which is an on-chain reinsurance platform. They raised $5 million from Rockaway X and Forward Industries, which is the Solana DAT.
Then we have a monster deal. This is Bullish, the crypto exchange that owns CoinDesk, so they're the ones throwing consensus right now. They agreed to acquire Equiniti, that's a transfer agent, for $4.2 billion, which is interesting given that Bullish's market cap is not much more than that.
Yeah, I mean, this is a huge deal. So Bullish has a market cap of about $6 billion on the public markets. They're buying, how do you say this, Equiniti? A huge push into tokenized securities. So this is one of the biggest transfer agents in the world. It looks like they're private equity backed by Cirrus Capital. So it's an all stock deal. Bullish is going to assume $1.8 billion in debt from Equiniti. Seems like the transaction is proposed to close in January of 2027, pending regulatory approvals. I think we talked about this actually last week, I think, about transfer agents are a necessary component of all of these on-chain RWAs. And this will put Bullish kind of squarely in the lead here from a market share perspective. We also saw last week ComputerShare partnering with Securitize, which is also emerging as a big player here.
Yeah, I mean, it's been an open question for some time now what Bullish would do with their balance sheet and how they would realize their ambitions. And as far as I understand, the exchange itself didn't necessarily take.
Yeah, I mean, the exchange actually does have significant volumes, but it must be a lot of volumes outside the United States because it's definitely not one of the bigger venues in the US. Unless it's one of these like LMAX situations where it's like a wholesale market. I guess that's possible, right?
Yeah, I will say, even though CoinDesk is probably a smaller portion of their business, I was very surprised by the attendance at Consensus this year and also the speaker quality. It was very good on both counts.
Yeah, that used to be. Remember how big that conference was when it was in New York? That was just the marquee event of the year.
I remember waiting in line for hours in, what was it, like the Midtown Hyatt or something in 2018. Oh,
yeah. Yeah.
You remember that one?
I remember that one. That was a tough one to get into. That was the Lambo year. Lamborghini's out front.
So this was a little more restrained, but it was very, very busy. So different kind of attendee base. And, people say like the mood is really dour in crypto or DeFi's dead or whatever. I mean, it is still nevertheless very, very busy here in Miami.
I have a lot of memories from Consensus Conference. There's a couple of really good ones. One was the year that our former boss, Abby Johnson, gave a speech, which was a really good speech. But like 5 minutes before she went on, R3 announced their fundraise and was talking about how the future was these private blockchains and just like open chains are not a thing. Followed immediately by a speech from Abby being like, I love Bitcoin, basically. And the other memory I've talked about on this podcast was when Gavin Andreessen came out and said, I know who Satoshi is, and it's Craig Wright. I was in like the fourth row.
Oh, no. What year was that?
Oh, I forget what year that was. That might have been 2017 or something like that. 2017 probably, maybe 2016. And I was sitting right behind Roger Ver, and he was like, wow, like, I think everyone kind of believed it for a little while.
Goodness. So this is practically your 10th consensus. I don't know if you went to all of them, but...
No, I haven't been to all of them. Some years you just got to take it off.
It's a grim milestone.
You let the Deloitte will send 50 people. You kind of know what stage you are in the market based on how many people from Deloitte go to it.
So here's my problem with these conferences. And actually, you're guilty of this too, sometimes, dare I say. People wearing suits, like that part's good. But then wearing a backpack with the suit, it doesn't work. Can't do it.
Oh, you don't like that? Well,
no, and then I see these people like going to the nice dinner or going to the club, and they have their branded backpack with their laptop, and it's like, what are you doing? It doesn't look good.
Yeah, I struggle with that because I just think the backpack is an easier way to handle your stuff. You know, I'm not classy.
Yeah,
like
but
the briefcase.
For aesthetics, you have to do the briefcase. The briefcase is not convenient. For sure, it's not. It occupies one hand, but the aesthetics are important.
Yeah, the aesthetics are important, but you need to have a place for your stuff, like your podcast equipment, where you're going to put all your notebooks.
I know. It just, to me, it conveys the like summer intern working in their first their bulge bracket job. It's wearing the suit with the backpack. And as a grown man, you just can't.
I'm guilty of that. I'm guilty of that and sometimes I'll be like wearing the sneakers too.
Yeah, that's no good.
All right, last deal of the week, big fund deal here. Andreessen Crypto announced a $2.2 billion raise. It's their 5th crypto fund. So congrats to the team over at Andreessen.
Yeah, tons of crypto VC raises announced recently, including a couple 10-figure raises. So there is dry powder. I guess the question is, a lot of people think maybe that this marks a bottom for some of the liquid valuations. The question is, how would it be deployed? Is it going to the venture side or the liquid side? I guess we don't know yet.
Yeah, we don't know. I mean, historically, some of these very large West Coast funds have deployed into the liquid market, so you never know.
Yeah.
You want to talk about Coinbase first here?
Yeah, so a tough announcement from Brian Armstrong this week. He wrote a letter to his employees and tweeted that he has fired 14% of their employees, blaming the market cycle and also AI. And a lot of people were saying, well, maybe he overhired, or maybe he's right-sizing the company because crypto volumes aren't what they thought they would be. But I actually completely buy that this could be a solely AI-determined decision. Yeah. And I think it would be warranted, frankly.
Yeah, I mean, this makes a little bit more sense for it to be AI just based on the timeline when it was announced. When Square did their big riff and they said it was because of AI, I just didn't think the models were good enough then. And so I thought that maybe they were hiding behind it. But 14% of a workforce these days, I mean, it's crazy to say, but that doesn't catch me off guard when you talk about AI productivity improvements. I guess it's especially difficult at Coinbase because their business model is just so levered to retail trading. And when that declines, you do just have this crazy market downturn effect here where you're going to look like you're overhiring, then you're going to cut. We've seen this several times at Coinbase.
Yeah, that is they have this kind of cyclical issue, and they're you're a little bit laggy in terms of your hiring and your firing, so you're always trying to stay in line with what the market warrants. But yeah, I mean, we're definitely seeing this playing out, and this is maybe the biggest debate in markets right now is, are we headed for this kind of white collar labor apocalypse? Are we going to find new post AI jobs? Or will there just be a ton of people in the kind of like human services sector? Like, are there just going to be so many more therapists and, I don't know, dog walkers, etc.? Like, I am unsure. And I've asked this same question to ChatGPT Deep Research like 10 times. Are we headed for a jobs apocalypse? And it doesn't really take a side on it.
No.
But it certainly doesn't align with the view that we've always bounced back from technological changes in the past, so we're mechanically and definitely going to do it again.
Yeah, I guess you just have to hope that there are discoveries that occur as a result of this technology, right? I mean, it would imagine if you could use AI to, have a better understanding of physics, and all of a sudden we open up new modes of transportation, we open up, space travel. I guess you have to bank on GDP growth on the back of this.
Yeah, and I think the way in which it's not like previous technological revolutions, like, I don't know, nuclear energy and the steam engine and the combustion engine and the mechanical loom and the printing press, this is the most general technological revolution that we've ever lived through. Right? It affects all cognitive output. So, previously, if you're a displaced textile worker, you could, go work in the widget factory or something, right? Now, if you're a displaced lawyer, it's not like you can go be an accountant,
right?
So that's the difference. I think it's much more generalized, and it might even apply to physical labor too. I mean, humanoid robots, that's definitely going to be a thing. So I still continue to think like this fear of white collar job displacement, I still think it's real, but it's not a good thing if it happens.
Yeah, I agree. I mean, the humanoid robots will be more of a blue collar displacement, don't you think? That's where you start to think about landscapers and, people that work on highways and things like that.
I mean, it's pretty indiscriminate. Like, I've been thinking really hard, what jobs are immune? Even VC is not. Even our very own jobs. Not completely.
You just put a business plan through an AI? Is that kind of how that would work?
Well, I mean, part of what we do is taste, in theory, and diligence. And you could imagine LPs feeling empowered to do deals directly because they now feel like they have the technological edge and the expertise and the subject matter knowledge and the ability to diligence if they are just using good AI tools.
Yeah, I guess you could see that. I mean, you could also see this would be more of a regulatory and actually blockchain use case, which is just crowdfunding and things like that. That's kind of where I think there'd be a bigger impact.
Yeah, I mean, if you think hard about it, there's not that many sectors that are totally immune to AI, especially anything to do with knowledge work. So I continue to think that there is significant displacement coming ahead. And I don't know, it's actually quite scary.
Working for the government's probably pretty safe, don't you think?
Yeah, any sector that's highly regulated, highly cartelized, frankly, the legal profession will find a way. Certainly the medical sector, anything bureaucratic. Yeah, and I think that's why, government's going to keep growing as a share of GDP. Maybe it'll be 50% of GDP soon.
All right, let's move on to the Clarity Act. So what's happening now is Senators Tillis and also Brooks, Republican and Democrat, they have released their language for a bipartisan compromise to address the bank lobby's concerns around stablecoin yield. It's being called a compromise, but to me, it looks like a win for the bank lobby in that there can be no payments of stablecoin rewards based on AUM. It has to be tied to, it looks like, some manner of transactions. So almost like credit card points type of an idea. And so you'd look at this and you'd say, oh, that's not really a compromise. Crypto industry, crypto lobby lost on that one. But it's the bankers that are not happy, which leads me to the obvious conclusion that this was not really what the fight was about for the bank lobby. They just don't want the Clarity Act to happen. Because if the Clarity Act happens, all of a sudden you have a lot more competition for banks by financial services oriented blockchain companies. Case in point, everything we just talked about on the fundraising with tokenized securities and things like that. So I think it's pretty clear the banks just don't want this bill to happen, but it's also very clear that now there is a compromise. It is bipartisan. This is going to go to a committee vote, I think, next week. And I'd imagine it'll get out of committee, and then you just need to hope that it can pass.
Yeah, I think that's an astute analysis. I mean, the Tillis is normally working hand in glove with the banks. And now the banks are not backing Senator Tillis's own compromise, as Alex Thorne pointed out. So this kind of suggests there was just bad faith from the beginning on the side of the banks. They got everything they could have wanted in this compromise. It's not a compromise in any meaningful sense. It's just any interest provision of stablecoins is effectively banned, and maybe you can get some meager rewards through some other unrelated mechanism, but not a compromise as far as I can tell. It looks like the banks, were negotiating in bad faith, and regardless, this seems like progress. Hopefully it does pass, even if it's not the best bill we could have hoped for.
So I think the thing to watch for now is, okay, it'll go to committee. There'll be a lot of loud talking. Elizabeth Warren will say that crypto's for terrorists and things like that. But it should have the votes to get out of Senate banking. Then it'll go to a floor vote in the Senate. And I think what'll probably end up happening there, if I had to just guess, is that there's going to be proposals to put language in the bill around ethics. And they're trying to put in language that says Trump's family cannot be involved in the industry, and that'll be a battleground. And so you just have to bank on that issue going away. And so in order to get to 60 votes, I think you're going to need like 10 or 11 Democrats to be on board with this. And that's where the politics and the money here becomes a factor. When you think about the vulnerable Senate seats and whether or not you want to be on record going against this bill heading into an election.
Oh yeah, very much so. And it's not like the crypto super PACs are in any way diminished from the last election cycle.
No, I think they probably have more money actually now than they did in the last cycle.
Fairshake kind of wrote the book on supporting an incipient industry, because now you hear the AI people saying we want to do Fairshake.
Yeah, right.
So talk about a successful electoral strategy. Now the other guys are saying, yeah, this is the standard.
Well, I think you're going to see a lot. It kind of rhymes, right? So you have all of these anti-data center people that are saying it's melting down the environment and they're worried about water usage. It kind of reminds me of Bitcoin mining.
Yeah, no, it's effectively identical. I mean, I looked into it for AI queries. What do you think a query, quote unquote, uses? I mean, it's not really using. It's not, the water doesn't pop out of existence when you do. But if you had to guess, what do you think the water use of a given query is?
Half a cup.
Oh, way less. It's like on the order of single-digit milliliters.
Oh, okay. All right, but it's sort of a funny way to think about it, because at a data center, it's not like you have just a faucet running into it. It's just recirculated water.
Right, and the water doesn't pop out of existence. I mean, so you have the primary usage, and then the bigger part is the secondary uses, as in like there might be a river that is some of the water is redirected into a power plant, and it cools the power plant, and then the water is sent right back into that same river.
You just fill it up once though, right? It's like filling up a tub at a data center, right? Like you don't need to have constant 24/7 flow of net new water coming into a data center, which is why this always puzzled me.
Well, I mean, it really depends, frankly, on the model. I mean, many data centers don't really use water directly at all. They might be air cooled.
Yeah.
So then the associated water use is you trace those electrons back to the power plant, and then you look at what the power plant is using. But either way, however you compute it, as narrowly or broadly, it's just not like, look at how much water almonds consume, or golf courses. And then if you want to say, well, maybe this is a debate about resources, like resource allocation. Okay, data centers, believe it or not, don't statistically increase electricity prices. So states with lots of data centers, on average, you're not seeing higher consumer electricity prices. Believe it or not. And in fact, having all these huge hyperscalers and big tech companies effectively supporting the build out of the grid arguably is a good thing. And in some sense, it subsidizes the ongoing electrification of the grid that was necessary for the green energy revolution, right? Electric cars, heat pumps or whatever is that thing that they're going to house is like, if the climate folks get what they want, there will be a massive increased burden on the grid just through more residential electrical usage. So it's actually quite convenient that now the big tech companies are directly paying for improvements to the grid.
Yeah. Yeah.
If you are climate conscious, it's actually very hard to be against data centers. And the other thing is, you see people protesting these data centers, right? They don't want them in their neighborhood or whatever. Those people, it's another way of begging to pay higher property taxes, protesting against a data center. Because if a data center comes in, they will pay billions in local taxes and fund all of your social services, your schools, police, everything. So they're directly acting against their own economic interests. So I'm always shocked when I see this, because it's like, your property tax bill will go down if this data center is built. Wouldn't you want that?
Yeah, and it's puzzling because it's not like they're that loud. So the noise pollution thing doesn't really ring true, I guess, unless you live right next to it. And it's not like these data centers are populated with thousands of employees. You know, it's not a huge drain on like the roads and, you know, local restaurants and things like that.
Yeah, and we haven't even said anything of the benefits, which is everyone uses AI. It's enormously useful to everyone, a student, professional, anyone. And even the critics use AI. The critics who write emails to their local council trying to knock at the data center built are using Claude to write that email.
Right.
So you always have to consider the virtues of, and this is not to say nothing about improvements to biotechnology, medicine, material science. So it's very similar to the Bitcoin debate, except the advantages and the positives of AI are so much more obvious because they're just apparent if you're a user of the technology.
Yeah, I guess the way we got on this was just the Clarity Act. And maybe the last thing I'll say about this is if this thing passes, I think people are underestimating how big of an impact this is going to have on the M&A market. I think you're going to have banks, broker-dealers, and asset management firms dust off their business plans and go into these build versus buy considerations really quickly in the same way that the Genius Act prompted some pretty quick M&A. So this will have a material impact on the startup ecosystem. And I also think you're just going to see a lot of hiring at these banks. You already see it, actually. The job listings at the big banks for digital assets, it's gone up materially over the past 8 weeks. And I think there's some underwriting that there's going to be regulatory clarity either via this act or via the rulemaking. But you're starting to see this big ramp up in like managing director in charge of blockchain assets, those type of roles.
That's right. And we have a bunch of other news items along those same lines. So Morgan Stanley, they've been very active with their newfound crypto ambitions. They launched their crypto trading offering via E-Trade this week to a subset of customers, undercutting Coinbase, Robinhood, and Schwab on transaction fees with a 50 basis points take rate.
Someone was asking me about this last night, whether or not I thought this would turn into a price war. I don't think so. Do you? I mean, if I was Schwab or if I was Robinhood, I don't think I would change my pricing strategy based on Morgan Stanley coming out. I don't know if 50 bips versus 100 bips is enough reason to switch brokerage platforms just for cryptocurrency. And we're not talking about every cryptocurrency, and we're also not talking about the ability to pull the cryptocurrency off the platform and put it into a hardware wallet. We're not talking about the ability to stake it. We're not talking about the ability to put it into a Morpho vault. So I don't know that this is actually going to result in a price war. The product set is different.
Yeah, I agree. Those brokerages are not necessarily fungible with each other, and there's obviously costs associated with switching. I think we see the price war on the ETF front, though.
Yes,
because it's much easier to, choose between ETFs.
Yeah, there is a price war on the ETFs. That's true. I just think spot crypto, that's not going to be that's a good feature of a brokerage, and it's a necessary one. It's surprising that not everyone has done it. But I don't think you lose customers. It's not like equities, right? When we went through this huge equity price war, that could be the reason that you'd switch from like an E-Trade to a Schwab based on commissions, but I don't see it for this one.
The CME is introducing cash-settled Bitcoin volatility futures in the coming weeks, which is the first regulated product of its kind.
I think that's going to be a 24/7 market too, right? That's pretty interesting. CME is always at the cutting edge of this type of stuff. Bitcoin volatility futures. That makes sense, right? People want to trade that.
Why not? Next up, we have Securitize. They received FINRA approval to be a custodian of tokenized securities and serve as an underwriter for initial tokenized securities offerings. So that's the first broker-dealer authorized to do that.
Yeah, you're going to see more of this. So they become a qualified custodian, I guess, effectively there. And then they can take things public. I think you're just going to see a lot of attempts to go public here via security token. Maybe see some later stage startups go that path. How attractive that market is going to be a function of how liquid it is and how many buy-side participants come into that ecosystem. So you'll see Securitize obviously go live with this. I think you'll see a handful of others over the next few months. So definitely a big development. In other regulatory related topics here, the SEC, did you see this? They delayed 24 prediction market ETFs that would have launched this week. They've requested more information about the mechanics of how these things work and the disclosures. Some of these products are devised to give specific exposure to outcomes like presidential elections and whether or not Congress would flip. There's a bunch of them tied to the 2028 election. I think these are actually going to be super popular if they get through. Bet on blue, bet on red, bet on House, bet on Senate. If you could actually buy these on brokerage platforms as ETFs, I think the inflows would be very, very big. But I get that this is totally novel. So I think getting more information about how these things work, I understand why they want that more time.
Yeah, I mean, you remember around the election, there are all these thematic ETFs like, oh, this is the portfolio of stocks that we think do well in a Trump victory context, and it was like defense and private prisons or whatever it was. People yearn for highly specific exposure to certain events. And if you can get it in your brokerage, all the better. So I think these will be quite popular when they come out. I just don't know how they are going to work exactly. And I think some of the Bloomberg guys might have messaged us about it, but how do they work again? Do they just get retired when the event happens?
So I think the way these work is the prediction market shares, like the ETFs, they'll hold the exposure to whatever the underlying contract is. So I think the ETFs would theoretically settle at 0 or 1. And so I think you're buying on that spectrum. So you'd be buying a 50-cent exposure right in the middle, and it's either going to settle to a 1 or a 0. So that's my understanding of how these things would work, which is different. I can't think of any other ETF that has ever worked that way.
Yeah, I mean, it's a completely unfamiliar structure.
Because it kind of goes to trades to 0 and you wind it down, right? Like they get wound down either way. So you're kind of liquidating an ETF at the defined mark.
Yeah, that must be administratively complex. So I'm not surprised the SEC delayed these, but I'm very excited to see them trade.
Yeah, these are kind of like didn't SBF have a bunch of these type of things? Like he had
the Trump win contracts. Yeah, that's right.
So MicroStrategy, they're in the news this week. They didn't buy any more Bitcoin. I think they have an earnings call coming up, so sometimes they have these quiet periods. But there was a comment by Saylor that said he might be selling some Bitcoin just to prove that he can sell it and fund a dividend. What do you make of that?
Yeah, I mean, I sort of understand what he's trying to say, which is he wants to not surprise the market in the eventuality that he has to sell the Bitcoin. And of course, if you look at this thing, he's going to have to sell something to pay the dividend, just mechanically speaking, the dividend on STRC. So issue more common, maybe. But if that never trades at a premium to NAV, you probably can't issue more common. So you're going to have to sell the underlying. So I guess the game now is strategically issuing as much STRC you can without upsetting the delicate balance and hoping that Bitcoin goes up so that maybe if you do have to sell Bitcoin to cover the dividend, you're selling at a higher price. But it seems scary. The more STRC he issues, the more fragile it gets.
Yeah. I think that's a good analysis of it. And you wonder just what the governance is around this. So Saylor's board, what does that discussion look like? Are they saying, all right, sell a little bit now, prove that you can do it? Or are they telling him, hey, we want to see 24 months of cash here to pay these dividends. We don't want you to go below that. I wonder how that works.
Yeah, and I think what people need to remember is ultimately the preferred and the common are claims, somewhat diffuse claims, but claims nonetheless, on the same underlying pool of assets, which is the Bitcoin. So if you are issuing STRC, $1 of issuance, it effectively subtracts the common's claim by $1. It's actually more than $1 because STRC has an attached dividend and it's perpetual. So you can do a little bit of math and see what that's worth. So every time you issue preferred, you're harming the common effectively. That's just an accounting reality. So the challenge now is, why would anyone buy the common if there's this huge stack of preferred sitting on top that has this ravenous appetite for dividends? That's the thing that I don't quite understand. And I get that, if Bitcoin goes up, people get excited about it, whatever. But why would you buy the common at this point?
Decided to throw in the towel on being a securities analyst on MicroStrategy a long time ago. I came out of the gate strong on this name, understanding it, but it's just gotten too complicated to keep up with. If it's not your job to follow it, it's difficult.
Yeah, I invested a couple hours a few weeks ago in understanding it in conjunction with AI, and I think I get it. It's not something I would own personally, but I don't begrudge other people that own it. I just want people to be mindful that there's nothing mechanically requiring that STRC trades at $100 or mechanically requiring that dividend is actually paid out in perpetuity. And you need to remember, they need to raise cash to pay that dividend from somewhere.
Yeah.
And if MSTR is not trading at a premium to the underlying, they're going to have some hard decisions to make. Did you see this Politico piece this week? Wall Street went to war with crypto. It's losing.
Yeah.
Basically arguing that the Clarity compromise was actually quite bad for Wall Street. I don't know. It seems to me that Wall Street is actually kind of, all of these firms are doing crypto stuff. So I don't see it as war.
It's a really funny framing because I get one part of it, which is like the banks didn't get everything they wanted, but clearly what they wanted was just for this to die entirely. And so that was just an unrealistic expectation, I think. And so Wall Street went to war with crypto and they won on their key issue, which was stablecoin yield, is what I would say. And now we're going to get a framework for tokenized assets, and the banks can compete there if they want to. But hey, sorry, you also have to compete with Coinbase and Kraken and Bullish and Talos and all these companies that are coming into the space. So a better way to phrase this was the banks wanted to not have any competition, and now they do.
Yeah, I mean, Wall Street doesn't mean banks either necessarily. Like, I think the asset managers have been pro-crypto for a long time, most of them. Some of the banks have been very hostile, that's for sure. But they didn't lose when it comes to this Clarity deal. They kind of got what they wanted. Or, they grit their teeth, and this is the least worst outcome for them. So
you just have to have competition in financial services. I mean, that's how you get a stagnant economy, is you anoint a bunch of winners and you don't allow anyone to compete. And unfortunately, that's how we've been living in this country for the past 25 years.
Yeah. And you know what really refreshes me is the fact that new charters are finally being granted by the OCC. And we had virtually none for a decade. And now there's some vibrancy happening for the first time in years.
Yeah. I mean, just innovation all across the spectrum in financial services is a net good thing. It's really good for consumers. And so to see the Elizabeth Warrens of the world be so anti this industry when it's cutting the cost of remittances, it's putting more dollars back in people's bank accounts or people's wallets, there's a surplus here that is being delivered back to the consumer across everything that we've been talking about. You're basically talking about whittling down middlemen. It's really good thing for the economy.
That's very well said. Before we leave, I want to do a featured prediction market for you. So Hantavirus pandemic in 2026 is trading at 9%.
9%. All right, let's keep that low. I can't deal with another Hantavirus. I'm going to have to get a whole new monitor set up. It's going to be disaster.
Yeah, I mean, that's actually way too high for comfort.
It's way too high for comfort. I mean, what am I going to have to do again? I'm going to have to buy a bunch more. Remember we were buying all those like cleaning supplies because we thought it was delivered to you based on touching your groceries and stuff. I can't do another one of these.
Well, really what you do is you create a sole proprietor LLC called, Hellcat LLC, and you
get a PPP loan.
Collect some PPP.
Yeah,
collect some PPP.
Yes, that'll start up again. I mean, then I'm going to be going for a run in the woods and just getting yelled at because I'm not wearing a mask. There's going to be crazy people like that again. I mean, that was going on.
That was the last straw for me with Boston. Was in Boston you had to wear a mask even if you're on a run by yourself outside.
People literally were screaming at me because I was 50 yards away from them in the woods running, not wearing a mask.
Yeah, in hindsight, there was a lot of lunacy around COVID that we've never reckoned with as a society. Like the 6-foot thing, that was completely made up.
Yeah.
Like completely made up. There was no scientific basis for that. I mean, the masks, I don't think they did anything. I'm not sure any of the non-pharmaceutical interventions did anything at all. So I'm not going to talk about the vaccines on this podcast, but yeah, virtually none of it was scientifically warranted. As it turns out.
It's like, what do you want? All right, we're going to shut down the playgrounds in the cities. I guess we'll just let our kids play in the street or something. What are we talking about?
Yeah, and we'd shut down the beaches, and the police would go and arrest someone that was surfing by themselves in the ocean.
Yeah, we can't do the Hantavirus. I'm not doing the Hantavirus.
No, we're opting out of it.
That might be what gets me down to Florida full time, if we do another Hantavirus lockdown. All right, so we'll just hope that Balaji takes a look at this and isn't that worried. I think that's all I can think of right now.
All eyes are on him, so I hope it's the right answer.
All right, so I think that's it for the week. I think next week's going to be a big week, as they say in the industry, because I think we're going to have some. I think we're going to have some fireworks in Senate banking. So we're going to keep an eye out on it. Everybody have a safe and healthy weekend. We'll see you on Monday.